What's going on, y'all? Welcome to another episode of Weeds Weekly with yours truly, Kevin Weedmark, aka the Mortgage Mouth. And every week, I like to come to you with this longer format. Gives us a chance to discuss what happened this past week, right? So we just get a refresher of where we're at as we're heading into the new week. We're going to talk about this upcoming week, of course, always relevant. We're going to talk about where did they go. The stat showed a 4.9% decline in the month of January. Not a great sign. And lastly, it's going to take time. So let's be prepared. We're going to touch on that. So what did we have this past week? The big news is the following. The perception that the economy is slowing down. We saw, retail sales fall off the map about a week and a half ago, right? We have consumer confidence this week. Walmart this past week also had disappointing earnings, so that hit. And we also saw the Fed announce that the possibility that they might pause their runoff of their securities. So all that in the mix, and what it's doing is it's pushing traders who are, let's remember, are in the business of making money for themselves and their clients. Number one. So in times where they believe that the economy is slowing down with layoffs, you have now all these federal layoffs, right? That's huge news. Look, and the fact of the matter is the federal government needs to shrink. It has a spending problem. Fraud, waste everywhere is getting exposed. It's a great thing, but it also means that people are going to lose their jobs. So what happens from there? Possibly they get picked up in the private sector, which would be an amazing thing, right? Because I'm sure there's some very talented people. Let's start over. I feel like my nose is running. What's going on, y'all? Happy Monday. Welcome to another episode of Weeds Weekly with yours truly, Kevin Weedmark, aka the Mortgage Mouth. And what I like to do every week is bring you a longer format. I'd like to talk about what happened this past week so we all kind of get a refresher because we could forget what happened, right? It's a new week, had a fun weekend, whatever the case may be. I want to talk about this week, obviously always relevant. We want to be prepared as we're talking to our clients. We're going to talk about where did they go? A 4.9% decline in the month of January. So what does that mean to us? And lastly, it's going to take time. So let's all be prepared. So we're going to touch on that. So let's talk about last week real quick. The big news that's really coming at us is the economy is slowing down. If you recall, about a week and a half ago, we had retail sales fall off the map. That was kind of the first indication as we headed into the weekend, and it moved rates lower for the week after that extremely volatile roller coaster of a week. This past week, what we saw is Walmart came out with some disappointing earnings. It looks like the Fed may put a pause on their runoff of their assets, of their debts. So those things combined with just the overall feeling in the layoffs, and you have the federal government on a firing spree. And look, no one likes to see anyone lose their job, but the government has a spending problem. It's flat out, it's obvious, it's been exposed at this point. The level of fraud, the level of waste is extraordinary. These are our taxpayer dollars that could be going to better causes, right? So this evolution is gonna take time, and that's gonna be what we talk about at the end. But what we need to remember is that traders are in the business of making money, whether for themselves or for their clients. They're not gonna get overly concerned with, should I be in a bond? Should I be in the stock market? Whatever the case may be, they're just going to be wherever they feel is the most comfortable, has the best guarantee to make money. And right now, with a slowing economy, with the layoffs, you're seeing corporate layoffs as well. That means that stocks potentially could not do so well in the coming future for 2025. So what does that mean? Well, a lot of these traders are going to move their assets into treasuries, and that's what they're seeing. It's happening ever so slightly, but what we're seeing bad days in the Dow as traders pull money out based on that fear, and they're moving it into a guaranteed rate of return. Whether it be small, it doesn't matter. Again, they're in the business of making money, and I foresee that this pattern is going to continue for the remainder of Q1, especially with continuing resolution coming. And I now am indicating I believe it's going to persist into Q2 and even trickle into Q3. So we got a little bit of a haul here based on everything that seems to be going on. So that's the other big thing. What we saw on the housing front, we kind of had a mixed bag. It was very interesting. We saw housing starts plummet. So what does that indicate? It indicates that right now, again, there's uncertainty. What is going on? Massive layoffs. What is the government going to look like? What are those people going to do for jobs? Is my job secure? Interest rates are still a little bit elevated. Home prices are there's a lot going on. So it looks like builders are going to be as cautious as well, and their housing starts not good. On the flip side of that, permits did well. There was an extension of permits, which means to me that the long-term outlook for builders and for housing looks good, at least currently. So that was a dynamic that we're going to want to continue to look at month over month over month to see how that plays out, because that could start flowing into predictions for Q3, Q4. So what's coming at us this week? Is the customer finally feeling it? What do I mean by that? It's the weight of inflation. It's the weight of home prices being elevated. It's the weight of now layoffs. And what we saw again, retail sales fall off the map, and now we have consumer confidence. So is one gonna, correlate to the other? Are we gonna see consumer confidence fall off the map? If we do, rest assured rates will drop. That data comes out tomorrow on Tuesday. So that's something to definitely keep your eye out for. I've been saying it now for probably the last 2 years. When is inflation going to eat away at the consumer enough to where just confidence? Now what we're seeing is it was going to take more than just inflation. It was going to take the uncertainty of the labor market, a slowing economy, all the factors, not just inflation just beating them down. So let's take a look at that number on Tuesday, and I think it's really important, and it's absolutely something traders are concerned about. The other thing we have is a temperature check. Are we growing? We're going to get Q4 GDP numbers. I don't really expect anything drastic to change there. I'm more interested to see where that number falls as it correlates to Q3. We know it's going to be less. Q3 was pretty good. I'm more inclined to look at what is the number, because that's going to be the barrier for Q1. That's going to be the temperature gauge of what is actually going on. Is the feeling that the economy is slowing down, is it true, or are we really slowing down? So I think that is just, it's something that's going to come in around forecast. Don't think it's a big market mover, but it's absolutely something traders are going to look at. And then here comes the next round of inflation. We got the PCE coming out. That's going to be, it's the core number. Fed's main goal still currently, in my opinion, is to beat down inflation. If that means slowing the economy, I don't think they're overly concerned with that, because they're trying to deal with the dynamic of the debt ceiling. What is the administration going to do? What does that look like? What do tariffs do? So that is a real big uncertain for them until there's a clearer picture. But the one thing that they can really still focus on is inflation. So that number on Friday could be absolutely something that moves the market. We saw previously, PCI come out, and PPI. Those numbers were very hot. And what did they do? They spiked the market. We jumped from 4.5, 4.6% in the 10-year treasury all the way up to 4.8. Huge moves. So don't fall asleep at the wheel on Friday. If your clients are under contract, make sure they're talking to their mortgage professional by Wednesday of this week, especially if that consumer confidence number comes in lower. We see a little bit of a slope. We see a little bit of a valley. I would highly recommend you giving them the advice to lock it. The other thing is, where did they go, right? So I'm always looking at a topic that I think is something we really need to be focused on. And what we saw is in January on existing home sales is a 4.9% decrease. That is a huge decline in the space, especially as prices are increasing. And I think there's several factors at play, and we talked about them already. A slowing economy, Buyers are seeing layoffs, right? Now they're getting concerned about their job. They're seeing a federal government that just is moving at light speed. And there's a lot of uncertainty behind that with the rhetoric and what's going on. And hey, even somebody that could potentially be in favor, there still remains a lot to be seen. How is it all going to play out? Because you know there's going to be court battles, you know it's going to be all over the news, and that just creates uncertainty for buyers. So I'm not surprised by that number, but it's a big drop off, especially with all the optimism, right? As we were heading into 2025, everyone was, yeah, only to see not so much. Once we actually got into January, everyone started to be like, I don't really feel so good. Inflation's still high. You told me before that rates were going to drop in 2023, 2024. Are they really going to drop? Are we going to get down to the 6% level that you're saying? Or am I going to be hoodwinked again and we're just going to remain 7% for the rest of this year? And if that's the case, I don't want to play ball. So it's going to be interesting in that dynamic of what happens. Takes me to my last point. It's going to take time. Look, no administration can come in and do what this one is doing, and it's not going to take time. Again, moving at light speed, slashing jobs everywhere. Where are those people going to work? What is that going to mean to the economy? Also in considerations, what the hell was that? Something fell. Anyway, all of that needs to be taken into consideration, right? And we need to be prepared. You know, I initially thought that rates were going to recover in Q2. I thought that we would see our first Fed funds rate cut once we got through QR. I think at this point, it's going to take a little bit of time, as you're going to have to work through lawsuits. You're going to have to really gauge what the effect of all these job cuts have. We're also seeing, job cuts once again in the tech industry. We're seeing them in big corporations. We're seeing Walmart miss earnings. Again, until we can get energy independence locked in and done, and that's going to take another 6 months, in my opinion. And until we can get inflation under control, and that can happen with a slowing economy and things like that, energy independence can also assist with that. Until those things happen, it's going to be a slow haul. So as optimistic as I believe all of us were heading into 2025, the reality is we need to be communicating to our clients. It's not just going to be all roses this year. We need to be very realistic with them, because again, I think being told the same message in 2023 and 2024 for everything to just kind of be at a standstill, and now we layer on another uncertainty, that could be a problem. The good news, however, and you can tell them this, is with the uncertainty, traders want to be making money, as I already alluded to, which means they are going to move money into treasuries. It's a guaranteed rate of return, and ever so slightly, that is going to tick down interest rates, regardless of what the Fed does. The Fed's, as I mentioned before, is irrelevant right now. So that dynamic is what is going to continue to just ever so slightly edge rates down. So hopefully some of our clients love that interest rate, love the lower rate. They're not in the 7s, they're in the 6s, and they jump on that, especially with the ability to still use the bank's money and use those buy downs. All right, y'all, I hope you have a great week. Happy selling out there. We got out of the cold, right? If you're down in Austin, Texas, we're still in the cold if you're north, but looks like a little bit warmer climate's coming our way. So let's rejoice. We can get back outside. If you need anything, a flyer, a quote, you have a client that just needs some recommendations, wants to learn what VA can be for them or what payments would be, please don't hesitate to give them my name, my number. Would love to have a chat with them. Please also feel free, and it would be greatly appreciated if you would go on YouTube and subscribe to the channel, The Mortgage Mouth. Every day I put out a daily dose as well, so I update us on what happened in the marketplace. And then I give out the Weeds Weekly on Monday. We got our Friday wrap up, and I'm going to start launching a little bit more tutorials on first-time homebuyer programs, how to use the bank's money, how to shop for a loan, things of that nature. So once again, everyone have a great week out there. Happy selling, and I will talk to you soon. Cheers.